Hi everybody, welcome to another update on the stock screener. Today we're going to look at the candy store again. I haven't done a lot of trades based on this. I did do some small trades in the meantime, but these are the core positions. So what did I do with these stocks? First of all, I want to say that gold is doing very well, making almost new all-time highs. So you can see that we had very bad data again today with housing market index cratering, with manufacturing cratering, and still high inflation. So I think rate cuts will come. So I'm focusing on gold, which is going much higher to 3,000 at some point. So that's why I deleted trigon metals. I didn't want to be in copper when recession hits. But yeah, it looks like I was wrong on copper. It has gone to 5. But okay. I also sold trigon metals because I didn't want to hold the shares when they are doing reverse splits and spinning out the exploration company. So this one is gone. Also, they did a delay. They are not going to go to the 2,000 tons per day this year. So plenty of time to buy this back. So out it is. And these three are still in. Let's take a look. The first one, Soma Gold, has not done that good. And we know why, because of a bad quarter. There was a bad quarter in the fourth quarter. A lot of costs up due to things like tailings dams that still needed to be finished, but that's already finished now. Also change in mining methods, but they're doing great right now. Costs were up a bit due to that change in mining method. Now the costs are back down, so I expect this to return back to new highs as the gold price goes up. So what is the upside? The upside currently is still 300% on Soma Gold based on this chart. 4 times EBITDA, easy triple from here on out. Production wise, we are going to see 36,000 this year, going to a new record high production next year, 44,000, and maybe some even more when they expand later on, when they find resources. But you can see here clearly that EV to free cash flow is going to be at 2. Very cheap, and PE ratio is even at 1.5 at 2,400 gold. All-in cost is currently around 1,350 and going lower when El Limon comes online by the end of the year. So looks very healthy. Let's see if they can increase that production. So this one stays. Next one is Serabi Gold. Has done pretty well over the last year. This here is a little bit of FUD around the licensing. They are still saying that there are problems with submitting that environmental document because they have some indigenous communities asking questions on several points. I think 16 points it was, so they need to discuss that a bit. So hopefully that will get resolved. If not, there are different scenarios to look at. Even if the Coringa plant is not going to produce anymore in the future, then there is still upside. So let's take a look. So Serabi Gold. This is the situation at full capacity. They would be going to 45,000 next year, 60,000. and stay at this level. Costs to come down below 1,400. So it's trading right now at a PE ratio of 1, forward looking. This is extremely cheap at 2,400 gold. If gold goes higher, then this is easy double, triple, if they can get to the 60,000, of course. And that's the question, do they get the license or not? If no license, then I could see this stay at 45,000 like this. Maybe the cost will be a bit higher like this. Even then there's upside, PE ratio of 1.5. So still easy double, triple based on this PE because this enterprise value will go up by tripling, as you can see here. In the worst case scenario, that's also possible that they need to shut down Coringa in 2028. This would go to 35,000 because Palito would be the only plant that's running. This cost would probably go back up, maybe 1,700, just estimate. And even in that scenario, you see that there's upside. So in all scenarios, there is an upside, at least a double. And maximum is a 5-fold increase. So this one is going to be one that I'm going to keep and probably buy more of because of this dip. The last one is Monument Mining, has done very well, almost a double. I recently bought more of Monument Mining. Let's see why. Basically, these gold companies are extremely cheap. And Monument Mining, you can actually see this here already. Market cap is the same, but the gold price has increased. So the EBITDA valuation is much higher. So this gap at least needs to close. That's about a double normally. But the market doesn't care, so I buy more of it. So what is the situation here? I expect they go to 40,000. That would give an EV to free cash flow of 1. If they don't get to 40,000, that's also possible. Then they stay at 35,000, still EV to free cash flow of 1.2. So very cheap. Revenue here is using concentrate. Here it is not using concentrate because maybe they are going to build the Biox plant. If not, then we would have this situation without Biox plant. But then also this this capex will go away. And still we have a PE ratio of 2. So that's plenty of upside. With a PE ratio of 2, this could easily double and maybe triple. And then you add also Murchison assets to that, which is the gray line here. So that also has a value of 15 million, I think. Current enterprise value 40 million, so it's almost half of the market cap. So extremely cheap. I don't see any downside risk on this one. Should go higher, especially when gold goes up. And gold is going to go to 3,000. So just an illustration, if gold goes up to, let's say, 2,500 this year, then 2,700, 2,800, 3,000, what happens then? Then we get an upside of 37 to 200 million. That's an upside of times 5-fold increase. And this is a 10% discount rate. If you use another discount rate, like 5% discount rate, then it's even higher, then it's 250 million. So 7x is possible, 7x, 3000 gold. And I do think that gold will be going to 3000 by next year. We have this cup formation, and then this retracement, and then we just add this this base here. That's about 600 $600. So this should easily go to 2600 and maybe overshoot to 3000, right? So it looks very good to me, and I stay in gold miners. So this is the current situation, and I'll see you in the next video. Bye.